All right, so this is going to be part five of my series. This is going to be the last one, and this is going to probably be the shortest one and the most theoretical one, I guess you could say, right? I don't have too many clear-cut examples of the tape in the level two necessarily being, super informative, right? I have examples of the tape, examples of things that I've seen when and where that have been relatively important into what my execution and overall thought process is behind a certain trade or environment, but I don't have too many, I don't have like a live recording of a tape and me taking a trade and backing it up, right? I think it's a good gauge to understand the behavior of certain parties and understand what the tape feels like, right? Because that's all we're doing. I mean, that's all we are as speculators and tape readers is getting a feel for the relationship and the auction, the relationship between these buyers and sellers, and that's all this tape is, right? It's where these buyers and sellers are passively playing at, and where they're buying and selling and when, right? And that's and for how much, right? So level two, right? We have the order book and we have time and sales. The order book is something like this where we have the bid and the ask, and these are all the passive orders, right? So you can see, the bid. Obviously, these two create the price, the current price of the stock, right? It's calculated based off the bid and the ask, right? Where the bid is the most that someone's willing to pay, and the ask is the least that someone's willing to sell for. You can have orders above the ask, right? That means someone is, really trying to buy this. They'll pay, if they market order, we're going to hit a bunch of passive asks sitting above, right? And they're willing to pay any price. And then, if someone really wants to sell, you'll see below the bid, right? And that's, those passive orders that are sitting underneath, right? If they market order those, or even if they, for some reason, limit order below bid, if they really want to get out or they really want to get in, right? It's kind of the below bid and above ask scenario. We also have mid as well. The mid price, which I mean, unless you're fucking retarded, you can understand what the mid price of the bid and the ask is. So don't really need to explain that too much. But that's the order book, right? Now, time in the sales is the I'm just looking at it right now. The time that the order was executed, the price, um, the lot, right? The amount of shares that we traded at that price at that time, and then relative to the bid and the ask where it was, right? If it was at the bid, if it was at the ask, if it was at above the bid or above the ask or below the bid, right? So if we see an order come in at the bid, right, that's going to be more than likely an order that is um sold to a passive buyer. It's all kind of relative in my opinion, actually. But if we see an order that happened at the ask, right, um, it's going to be, a buyer buying it from that ask, right? The majority of the time, right? And then, like I said, below and above, paying more or less, paying more or getting less for your position, right? So, if order happens at the bid, that's someone selling it to that bid and someone buying it for that bid. That passive order getting hit and vice versa with the ask. So, with this, right, you can get a feel for how the relationship between these parties um, moves, right? If we see a very heavy passive ask, passive bid at a certain point, that's creating that floor, right? If we see that there's a lot of orders, up to 105 on, let's say fucking Nvidia, right? Nvidia order book, right? Then we see there's a lot of orders sitting there. It means that there's, a passive buyer throughout this range. And then vice versa, if we see a very heavy ask, or this would be like 95, all the way up to like 107, right? And we see there's a large ceiling put in, right? So this is supply and demand essentially in real time, right? You're seeing the passiveness of those parties layer the bid, layer the ask, or not layer the bid, layer the ask. And you're seeing their buying and selling come in directly as it happens, right? Maybe a couple seconds behind, but you're seeing it come in as it happens. So this is supply and demand, you know, in real time, right? This is where the floor and the ceiling is going to be. This is where the draw is going to be in terms of supply and demand, and you can understand the behavior of these parties based on how they execute and how they place and layer their orders, right? Now, as I said before, these can be wiped, right? If we have a large buyer let's say we have a really large buyer at 10 or not 103 at 98 on Nvidia, right? But that selling gets really, really aggressive, right? And they start really, really pressing the gas. That seller really, really starts pressing the gas. This bid can get hit, right? And that order can be executed, at the ask, right? Um, or at the bid, right? Wait, hold on. Sometimes I feel like I fucked this up. Um, but that order can get hit, right? They can have that passive bid, say they have a 1.7 million lot buyer at 98, which is actually pretty huge. It would be insane if that kind of just got absorbed like it was nothing. That would definitely mean a very seller dominant tape on Nvidia that session. But if that bid is hit, if it's executed, um, someone's selling it to them, right? And if that selling is really, really getting aggressive, that buyer can be absorbed. And, even though it comes in as a bid, um, getting smoked, I mean, it would be at the bid, right? They would be buying it at the bid, if their passive order is met. But they can just get smoked, right? They can passively buy that, but if that seller is willing to sell it to them and they're absorbing that demand, the draw is going to be lower to maybe this $2.5 million lot at 95, and things like that. Same with the ask, right? If there's a $1.2 million ask and there's someone looking to sell it at 105, then when we draw towards $105, if you just see through that tape those orders getting eaten, that ask getting bid, right, and you see that demand absorbed, right? Maybe here's 105 on Nvidia, here's 100. Maybe we rally, we see that seller show his hand, we see that harmonic pullback, we're kind of seeing the weakness. Maybe this is like 600K now. We're seeing pretty notable bidding of that sell-off, and then we break it and we completely wipe this dry, and then the draw is going to be towards 107, right, where we have another 500K lot order, right? And then it's the same thing over and over again. It's kind of understanding this is a real-time like example of supply and demand and absorption and changing the hands, and that's what I like to use the tape for, right? The tape is more, in my opinion, an intraday, something intraday that works a little bit better because I mean, I'm not going to be able to, if I'm looking at this 105 lot ask getting absorbed by a buyer, right, where all that selling is happening and we're seeing that buyer bid it up, right, and I'm seeing that happen, or I'm seeing them eat that ask as it happens in real time. That's, you know, going to be an opportunity that I would take at that moment, or something that I use to align with my thesis on a higher time frame perspective, right? If 105 is a very, very big pivotal point within this chart and that's absorbed, then it, could potentially offer a long opportunity off 105 to 107. On the other hand, if 105 is a big area within this chart and I'm short side focused and I see that absorbed, I'm going to, okay, 105 seller was wiped. We're going to see where that 107 seller acts, and we're going to see how this daily closure acts. Things like that where the tape can kind of align with your thesis overall and can also be a potential gauge for an intraday position, right? Um, but and say we take out, say we have $100 on Nvidia is this kind of is this kind of support. We sweep that $100 range. We see a lot of selling come through, a lot of market orders come through in an immediate reversal and pin above that. That's a great example of like a stop loss rate where a lot of selling occurs under that range. We see those hands change. We can maybe see those sells pour in, and maybe they're immediately bid up, and we see that reversion. We align the selling that occurred in the tape with like a 15-minute or 5-minute wick, and determine that selling was bid and those hands were changed. And when that structure shifts, then we have an opportunity to long this, right? Things like that where the tape can really be a good gauge for your execution overall. And I personally only like to look at the tape at important spots and at larger orders, right? I have all of my time and sales set to, over 1,000 lots, because that's where the relevance starts to begin, right? If fucking little Timmy over there sells 50 shares of Nvidia for no fucking reason, just because he felt like it for a profit, like, I don't care too much about that. I care where the larger money is coming in and out. I care what that larger money is kind of doing at points within this chart that are very pivotal, that have had that equilibrium between supply and demand, that have had a larger seller or buyer that have shown their hand, and how that behavior acts and that tape acts, where there's a previous area where there's a large amount of intent at, there's a large amount of liquidity at, where there's, relevant areas, right? This goes along with the gaps and the liquid ranges and the higher lows, right? Like, how the tape acts at that range, how that seller and buyer acts, where they're placing their orders, where the draw is going to be, right? Like, countless times I've pulled my fibs and I've seen the bid or ask layered at that discounted range, right? Because that's just how it works, right? That's where that higher low and that buyer could potentially be found. But I don't really like to, like, if I'm kind of watching the tape at, what's a good example? Like here, like yesterday, like, we're not at a new high of day. We're not at these internal lows. If I, identify this as a very large buyer, or maybe there's some selling that comes in the tape, I can't really, like, it doesn't hold as much weight as if that happened at a new high of day, where this volume poured in at, to some extent. It doesn't, it's just higher time frame spots within the chart that hold a lot of relevance, that you want to see and get a feel for the relationship between that supply and demand, and how that auction and tape feels, right? It's sort of like, it's just something you watch and you get a feel for, right? You watch this tape and you get a feel for that relationship, and you get a feel for how a certain stock acts within this tape. And if there's something up, if there's something fishy, if you're seeing some things that give you an edge, right, where you think that there's going to be an opportunity one way or another, and it aligns with the, analysis of the chart, I guess you could say, and the volume price action, and the structure and the sentiment and the timing and the window, right? This is something that can be used to even further that conviction, right? It's all just developing your edge and adding on to that, and then when the timing is right, you can really be confident in something, things like that. So that's really all I have to kind of say about the tape. Like, I don't have, I'm only been a tape reader for about a little over a year. I don't have so many examples of, I have one example of, like, a real life tape um, range, but but it's more, in my opinion, getting a feel for real-time absorption, real-time supply and demand, real-time path of least resistance, real-time changing the hands, right? And it all is relative to where you're at within this chart. So the one name that I'm going to talk about is Snow, right? This was a name that had a, I really did like how the tape acted that day. And it all aligned with the broader contextual thesis behind Snowflake. So we go back to November of 2024, right? Or not November, August of 2024, right? We had a very big gap down off the report in February. We see the draw to new lows. We see those lows swept on August 5th, where you see a pretty appealing leg that follows that. And then the breakdown to an undercutting of those lows, where that progression is stalling, and that notable buyer and wick and exhaustion from the seller's perspective of things. You can also see exhaustion in the tape, is showing, right? And so we have the overall sentiment being, long side focus down here, right? When you look at the weekly chart, you look at where we're at, we see the kind of previous climaxes building out the beginning of 2024. We can kind of infer that, if there's a focus on here, it's going to be long. The edge is long on, a multi-time frame perspective, weekly, monthly, and then it's just waiting for that daily, hourly setup to kind of align to potentially give you an opportunity, right? Now, when we break it down to the daily chart, we go ahead and we check out the fact that we have this massive gap down, right? This 15% peg, but the following price action after is relatively unappealing, right? That breakdown, we attempt to base the low of the earnings report, lose it, and then our kind of resistance is established at 115. which is that earnings candle low, that earnings candle being very liquid, being very important, being very relevant. And you can kind of already infer, when we have a pretty easy leg that happens off of all-time lows, but also a candle that's, holds a lot of liquidity underneath these lows on a gap down that's rebid and has lack of an intraday structure. Um, we can kind of infer, especially with the subsequent continuation after being very weak, right? That seller kind of getting bid. We see the sweep on the new lows, that the draw is going to be into this peg, right? But we have no clear edge until, right, on, remember the support turn resistance off 115, right? We break it, we lose it. That's 1, 2, 3 daily tests. Basically another 4, another 5, and then 6, 7, 8, 9, right? And the progression is stalling from those sellers, right? The volume on these legs is declining. We have, exhaustion from the sellers on this test of the leg. We have a lot of volume on a gap up this session that was kind of reversed, and then they bid it the following day. And then we see that exhaustion. And finally, right? Finally, we see this really, really clean pop on the 4th, right? There's not really super clean structure throughout this range. There's a nice bid here, but that leg after was just kind of absorbed, and we see the taking out of this September OPEX print where there's a lot of volume backing that and a previous buyer. And we see this really clean pop, right? Then we see 2 inside bars. That's the concept of supply and demand being the path of least resistance being established, right? We have a previous floor turned resistance that after like 8 daily tests has finally shown you a sign of a lack of effort from those sellers and a lack of result, with that volume harmony kind of pouring in. And we have the draw bring pretty clearly to 120 into this peg, right? Where obviously you have to be cautious and de-risk your position as we trade into a very liquid 15% earnings gap for the first time, right? We had never tested that before. So not like a shares trade I'm looking at here, but this 2-day inside bar pattern, right? This 2-day inside bar pattern it holds a lot of weight. And the reason it holds a lot of weight and relevance is because of where it happened, when it happened, and how it happened. And so we see that go down, right? And on that day where we have the, really decreasing volume and we finally get a break above, right? And this, keep in mind, this is, 8:32 in the morning. As we open up right under 115. You want to be able to take that 115 as your objective risk. We open up, we have the ask layered at 115, right? We have that ask layered. And we have the gap up, kind of wicking the overnight gap. And then what we see at 8:34 is that order eaten up, right? That ask absorbed. We have a big buyer absorbing that ask, buying through that 115 range, right? We see the above ask orders. They paid greater than the ask for that price at the current moment in time. They ate up this 115 bid, right? The ask was like 114.99. We ate that up for above the ask, and I mean, we know what happened after, right? We very clearly can see what happened after. This was a real-time example of a path of least resistance being developed. And you can see that ask that was layering his order was absorbed, right? We have a big buyer, and it's the same thing if it was if it was the opposite, right? If there was a large seller here and he had his ask or he had his bid, and we see that below bid order where they're really pressing the gas on that order book, we can kind of denote that draw is going to be into the peg, which it eventually was. And within 2 sessions, we had finally breached into the open of the gap down from the August report, and then saw a subsequent exhaustive stall top, and then weekly higher low into the 30% November peg. But just a great example, right? And one of the only examples that I will say I have a ton of just screenshots of things I saw on the tape. But what I've learned is not everything, a lot of the things in the tape are noise. You have to get a good feel for the ticker, the relevance behind what's happening where, right? Higher time frame important points within the chart are what matter to me in the tape. And just the behavior, right? Like I said. You can also see spoofed orders where they're layering that, and that's the draw, and then they pull it. I don't really kind of align my thesis with that too much unless it's like an intraday position. But the time and sales level 2 in order book is a great example of how you can see these concepts that I discussed in the first 3 videos in real time, right? How you can see the path of least resistance, the absorption, the exhaustion, the changing of the hands, supply and demand, right? How you can see this in real time, right? And so that's just kind of what I wanted to touch on. Had a pretty good example on snow here. I wish I had some more, but nothing like snow that was really, really clean that I personally got a picture of and saved at that time, right? So that's it. Short video, short discussion on the tape. But it's also not, you don't need the tape, right? Like, plenty of people can trade without the tape. I think it's an extra edge and an extra amount of conviction, similar to the options windows, and volatility time, like things like that. Like, it's an extra edge that can give you a higher confidence opportunity within this trade, right? You do see, right? This was, the window of strength, quarter 4, right? So there was a lot of confidence behind this trade that you could align with the timing, and the tape as well, and the structure. So a lot of things aligning into this one trade. But yeah, I mean, that's pretty much it. Just a quick explanation on the tape. One of those things that takes a lot of time though, and you have to get, like, you can learn, read books, watch videos, but you have to get a feel for the tape, and you have to learn it, and you have to, have experience reading the tape to really be able to utilize it in your own trading. So pretty much it.